The low interest rates have blown up asset prices so that there are no affordable alternatives that will protect you in this event. Look to silver, look to gold, look to platinum. Those would be the three places, maybe even in that order, that will give you some form of refuge. And again, it's not about getting wealthy. It's just about not getting crushed.
Welcome back to Liberty and Finance for this weekly market update with Miles Franklin Precious Metals CEO Andy Schectman. Today is Tuesday, June 14th, 2022. Andy, thanks for coming back on.
Great to be here, Dunnigan. Amongst all of my crazy traveling, I feel like a sequel to Planes, Trains, and Automobiles, and it's almost over. Appreciate you accommodating an audio only as I'm sitting in the airport. After pretty much being on the road for a month straight, I am just ecstatic to finally get back home later this evening. So thanks for having me and being so flexible.
Well, I know I'm not alone among our viewers at being grateful for your presence here with us, even though you've been on international travels, et cetera, and making room for this weekly market update. We are all keeping our eyes on what's happening in the major interest rate market and also interest rates and inflation in general. People have been feeling the pinch really in a very personal way in our purchases of fuel, food, medical, housing, everything. Our rent went up 50%, for example, and we've been just stunned, sticker shocked over and over again on any housing that we've been looking at. So the topic I'd like to kick off with you today, based on your research and personal perspectives, is how do we survive the highest inflation in 40 years? It was just announced officially, but people have been feeling it unofficially for some time. And I know you've got several aspects in different directions that you look at that from, but could we focus on that as how people can afford and survive this?
Right. So let's look at it and break it down a few ways. First of all, the rate of inflation, as measured by the flawed CPI, reached a 40-year high, right, of almost 9%. But remember, in 2020, the rate of inflation was only 1.4%. So we're already over 4 times the rate of inflation that we saw just two short years ago. So it's no wonder that people are feeling the way that they are, that rent and mortgages are going up. The latest 30-year mortgage has surged on average to over 6%, 6.1%. And so as a result, it just came out that housing affordability is the lowest on record, where new mortgage applications are in at the lowest level in 22 years. And the Fed hasn't even gotten started yet. The consumer confidence, as measured by the University of Michigan poll that started, somewhere in the late 70s, just came out, and it's at the lowest level of consumer confidence in the history of this poll over 40 years. And, imagine if the Fed was really getting tough on inflation, watching their stock portfolios, their IRAs and 401ks cratering, not to mention their home equity disappearing. As the Fed actually does get tough tomorrow, there's rumor by both Goldman Sachs and JP Morgan that they're going to raise rates 0.75%. They're really going to get tough on inflation. They haven't even really started selling off their balance sheet yet, and they're going to get real tough on inflation, as they say, but only raising points. Even if they did raise it 75 basis points, we're only at 1.5% then, with with inflation running, many times that, 4-6 times that. So I don't know. I think that inflation is bound to get much worse before it gets better. And I think all the jawboning in the world by the Federal Reserve is not going to amount to much, because if they're really going to get tough on inflation, they need to raise rates above inflation. They would have to raise rates 800 basis points, not 75 basis points. We are a long way away from really getting tough on inflation. And so what do you do to survive in this environment? And again, I honestly believe that in this environment where we are heading, he or she who loses least wins. And that sounds awful. But I mean, look at all of the equity markets. Look at everything so far this year. Year to date, I think, you're talking on all of the major indices. You're talking, everything's down 20 to 30%. The NASDAQ, the S&P, the Russell 2000, it's all down dramatically. And just wait until interest rates start to rise. And because the biggest problem, as we've talked about for a very long time, is that all of these assets that have been blown sky high, courtesy of the Fed, their easy money, their low interest rate policy, has created an environment where as interest rates rise, they all start to collapse. And you can see that without the Fed doing much of anything besides jawboning. Interest rates on the 30-year have gone up 40% in the last 6 months. They've doubled in the last year. And so, asset prices are definitely inversely correlated to a rise in rates, and they haven't even started to rise yet. If you look at what's happening, the Dow Jones is down. Last I looked, almost 15%. The S&P almost 20%. The NASDAQ almost 30%. The Russell 2000 almost 20%. You got Bitcoin and Ethereum collapsing. This is an environment where if you want to survive, you have to try to get out of harm's way. The only problem is there are very few places where to put your money safely. And, it's easy for me as the owner of a metals company to say, put your money into gold and silver. But let's just say one thing. All of these assets are inversely correlated to a rise in rates. And in theory, gold is inversely correlated to a rise in rates. But those rise in rates in terms of gold would be real rates, not nominal rates. And so the nominal rate will be increased to 1.5%, let's say, perhaps on the federal funds rate. But when you look at the real rate of return, you're still decidedly negative when factored against inflation. Gold has a long way to go as protection. And when you look at all of these markets that are down double digits, gold is up a couple percent. It's doing what it is supposed to do. I have been very consistent in saying that gold and silver are wealth. They are not something to own to get you wealthy. They represent wealth, and they represent the ability to retain purchasing power that has found its way to do so through German hyperinflation, through the Great Depression, through 2 world wars, through every pandemic. This is why owning metal has never been more important. But I guess I'll just simply say this, that if rates really do rise, to tackle this massive inflation, which is really getting to be difficult for people to deal with, already 4 times the level of inflation that we saw just 2 years ago, asset prices are going to collapse. So when they talk about the Fed being backed into a corner and most likely going to come in and ease and change things or go back and make things easy again when markets start to crumble, maybe when rates get around 4%, the reason they say that is because it's either death by hyperinflation or death by Great Depression. Take your pick. And that's what Fed Chairman Powell has to deal with right now. So it's a tough question, Dunnigan. Maybe the toughest financial question of our generation.
In the background for this is, as you say, bewildering. People who've been trying to set themselves out of harm's way by moving cash, for example, into savings accounts or checking accounts, just going to dollars and holding them in the bank. Well, first of all, there's a whole problem we've talked about several times in the past about how, in a very real and meaningful sense, nothing in the bank is yours. But aside from that, the dollar balances that people may be putting into checking and savings accounts, and my wife and I were among them, have been just hammered in terms of any kind of return. There was like money market 2% rate, and then it went down to 1%. Now it's at 0.01% rate. But that's not the worst of it. The worst of it is what you talked about. And as we mentioned with John Williams from shadowstats.com, joining us and saying if the CPI is admitting high single digits, 8-9% consumer price inflation, that the actual rate is multiples of that. So your actual purchasing power of the dollars that are sitting in the bank, which are eroding away at 10% or more per year, that you're falling behind. So I'm having more and more clients who reach out to me saying, look, I just sold a house, or I just sold a property, or I just came into an inheritance, or I just rolled over from a retirement plan, and I am not comfortable just having those that's that in the face of that. That's again, first there was the low interest rate that you're getting paid. Then there's the second, which is the devaluation of the currency through overprinting and so on. And that's also distressing that on the nightly news, as they're talking about high gas prices and everything. Oh, by the way, multiple stories out in the last day saying that both food and fuel and electricity may all double yet this year for people. So, and the big picture of access and stability of savings in the bank goes beyond just the inflation rate, because as Gregory Mannarino has been warning us, he says you've got to watch the debt market. When the debt market becomes unstable, things can break very badly in a very big way and lock up the credit markets and access to funds and that sort of thing. He just tweeted this morning on his newsletter, the debt market has become unstable. Watch out. So in the face of instability in the debt market, risking in the banking system, devaluation of the currency, ordinary people are really trying to figure out what should they do to protect themselves from this runaway inflation, which sounds like it's not going to go down anytime soon. Any specific strategies that you've been looking at that people should pay attention to?
You know, it's very difficult. I mean, there are very few places left to turn because one of the issues that has been created by all of the easy money and low interest rates is overvaluation in all asset categories. And so where to put your money is difficult. It used to be, you know, people would feel great having money in the bank, but as you mentioned, in the face of bail-ins, in the face of gaining the money markets, in the face of nothing in the way of return, when you look at losing double-digit purchasing power each year, leaving it in the bank is not an option. Putting it into assets that are massively overvalued and have been for 2 years that will crumble in the face of rising rates is not a good option. And so this is a problem that I think people need to understand. And this is why I say he who or she who loses least wins. In this environment, the best thing to do is, first of all, realize that profit is not a four-letter word. If you're sitting in equities right now at profit, it's time to take some profit and redeploy it. Where do you redeploy it? Look, you know, I keep coming back to the fact that I sell precious metals and I'm trying to be objective. I'd like someone else to tell me where there's any value. Look at gold and silver in comparison to all of the other asset classes, which are all many times their all-time highs in most cases. And gold and silver, half of its all-time high, and gold, still a few $100 away from it. There's still value to be found. They are muting the canary in the mine shaft. They don't want gold and silver to express themselves as things are breaking apart. And I think as it becomes more and more obvious that the Fed is out of options, if the Fed really does come back in and start to, reaccommodate, to come back in and add liquidity into the market, to lower interest rates again, I think the likelihood of them losing all credibility and inciting a major currency collapse is real. I don't want to take a step back for a moment because I think a lot of people focus too much on the Fed and the Fed's ability to engineer this tightrope, to walk this tightrope of inflation and asset prices and interest rates. You know, we've talked a lot about the Belt Road Initiative, connecting 75% of human population. It just announced that Iran and India and Russia have struck a new trade route, a conduit for trade between Russia, India, and Iran. You are seeing 85% of the world between the BRICS nations move away from the dollar, settlement away from the dollar. We've talked about the problems that we are facing with retaining or maintaining and keeping our petrodollar status. All of these contracts, all of this trade, it is all going through other parts of the world, through the Belt Road Initiative, and now this long conduit between India and Iran with free passage all the way through, safe passage all the way through. And all of these contracts are settling outside the dollar. As less and less demand is found for the dollar, that will in and of itself push interest rates higher. The Fed does not want to be to blame for blowing everything up. So the villain will be OPEC. It will be the BRICS nations. It'll be the countries that move away from the dollar. We've talked about the weaponizing of the dollar. We've talked about all of that. So what I'm simply saying is that not only do you have to worry about the Fed engineering a tightrope, I think you have to worry about the rest of the world looking for alternatives to the dollar and building infrastructure to do just that. And it's one of these deals where we're going to wake up one day to a new reality where the dollar, which, for the last 50 years has had to be accumulated and owned by every single country on the planet in order to purchase oil, those days are coming to an end. And all of those dollars out there, remember, we only represent roughly 10% of the population of the world here in the United States. You got 90% of the world who has to own dollars to buy oil until that stops. And when that stops, if you think inflation is bad now, if you think rising interest rates hurting equities and real estate values and bond portfolios are bad now, wait until you start to see a global divestiture of dollars, not just by the insiders who have been accumulating gold. We had talked a lot about during the reclassification of gold, but the countries that repatriated their gold, they were all these Eastern European countries that weren't part of the euro. And it kind of dawned on me the other day in looking at it, when you see the numbers that are coming out of the countries that are not part of the euro but are in Europe, they are massively accumulating gold. You have like Poland, like the Czech Republic, like Hungary. These are the countries that repatriated their gold and went on a gold buying spree in 2017 before it was announced that gold was being reclassified Tier 1. And this year, they're adding 10 times the amount of gold. Each one of these countries is buying over 10 times the amount of gold they did last year. You have the repositioning by all of these countries, whether it be in accumulating gold, which means selling dollars, or building trade routes that aren't part of the dollar, striking deals that usurp the dollar. This is where the catalyst comes in. And so I think people need to understand that, yes, it's been a hell of a ride that the Fed has engineered for the last several decades. But if you want to stay out of harm's way right now, you need to take some profit. You need to redeploy it. You have to have some metals. And I don't really know anywhere else to safely put it. And I'm telling you, I think about this all day long because the low interest rates have blown up asset prices so that there are no affordable alternatives that will protect you in this event. Look to silver, look to gold, look to platinum. Those would be the three places, maybe even in that order, that will give you some form of refuge. And again, it's not about getting wealthy. It's just about not getting crushed when either the Fed blows things up or, in my opinion, equally as possible, you start to see such a massive move away from the dollar by these BRICS nations and a continuing increase in gold accumulation that we wake up to a new reality at some point very soon. As I've said, I believe it will be a BRICS nations currency backed by gold, not convertible, but backed by it with the veracity of it, the immutability of it, denoted on a distributed ledger. And there is no coincidence that the Chinese have already done close to 10 billion in transactions on the Belt Road Initiative on their new digital yuan. It is that technology that I believe the BRICS nations will launch a gold-backed currency. And all of these countries that keep accumulating gold, they're going to be part of it. And the West will be left isolated out in the cold. That is what I think is a bigger threat or an equal threat to the quandary that Jerome Powell and the Federal Reserve find themselves facing.
And if I'm understanding you correctly, the way that this comes down to hit the ordinary person is that if they're sitting on dollars, then those dollars are subject to what you're talking about happening if the rest of the world pivots away from the dollar. And if they're sitting on other assets like stocks, bonds, and dollar-denominated real estate, dollar-denominated assets, again, those will be subject to the interest rate spike that would likely come if those dollars come home. I forgot to mention, and I should quickly, if people want a free guide, it's called the Free Golden Guide to Investing in Precious Metals, just email us with the title Free Guide in your email to libertyandfinance@pro protonmail.com. That's liberty and finance, all spelled out, one word, at protonmail.com. Just put free guide as the title of your email. Make sure you include your name in the email, and we'll shoot you a link to the PDF document that we created to help answer a lot of questions, give some of this background. Andy, also for the weekly market update, we always like to see if we can offer a special that allows people a opportunity to acquire physical precious metals at a rock solid price. And tell us if you would, what you have for us today.
Yeah, we have a nice supply of the United Kingdom 2022 Silver Britannias in stock at $5.75 over silver spot. First time in a while that I've been able to offer some 1 ounce silver coins at a very competitive and affordable price, as they've been very difficult to get, but they are in stock and they are ready to ship. So that's what we'll do this week. And for those looking for a 1 ounce coin, it should be as good of a price as anyone will find in the country.
One of the things that surprised me when I didn't know about that coin originally, we used to buy American Eagles only, my wife and I, and after the premiums went so high on American Eagles, I switched over to Canadian Maples because I'd heard of Canada and knew a little bit about that. And then the premiums went up on those, and then the Britannias came up next. And the thing that blew me away was they have exactly the same technical specifications as the American Silver Eagle. 3 nines fine, 1 troy ounce, pure, government minted, face value, marking, legal tender status in their country. It's the exact technical specs of the American Eagle, but made by the British Mint rather than the U.S. Mint, and the price remarkably less expensive. So you can get that much more ounces of silver for your budget and still have a 1 ounce form with all those other attributes. Any other thoughts that occur to you about the Britannia?
Yeah, I mean, you're exactly right. It's just that their mint is, in terms of government-backed sovereign mints, they're more efficient than the U.S. is. And, there are some people like Ed Steer who think that the mint isn't releasing Silver Eagles to protect from exacerbating the wholesale shortage of 1,000-ounce bars. And whether he's right or not, I can tell you the U.S. Mint, as one of only 27 authorized resellers on the planet, the U.S. Mint, which I'm very, very, very proud of my association and relationship with them, but they've been horribly inefficient. And especially and almost exclusively as it pertains to silver. But I mean, our government really is just seems lost these days. Here we have inflation at 40-year highs. We have an open border. We have all sorts of problems with gun violence. We have, just leaving a pandemic. We have all of these problems. We have, the asset prices that are coming down, and yet instead of dealing with these things, they're on a witch hunt again for former President Trump. I think that the moral of this story is that you can't look to the United States government to bail us out of this mess. You got to bail yourself out, because they continue to be doing what to me seems like, whether it be completely diametrically opposed to what I would do or not, it is almost as if they are engineering purposely a massive market sell-off. And I mean, it's almost as if you couldn't do things more wrong than the way that they are. And I think that extends to the U.S. Mint. One of the few areas of the U.S. government that is profitable, they can't even keep up remotely with supply enough to where for 2 years now, we've seen double-digit premiums on Silver Eagles unabated. Goes up or down by $1 or $2 here and there, but that's just unacceptable when, for that exact same period of time, the other 5 major mints, South Africa, Australia, United Kingdom, Canada, and Austria, have all been single digits. So I don't know. It just seems that our government is a little bit inefficient these days, and the U.S. Mint is not immune to that inefficiency.
Well, Andy, I know that our time is limited. You got a flight you got to catch. We caught you at the airport. Really appreciate that. Always appreciate your visits here with us on behalf of our viewers. And we're going to need to follow on to some of the threads that you just started there about the intentional, by design, controlled implosion of many aspects of our great nation and, frankly, of many other nations of the free world, and what people need to do about it to take care of business. As, again, Gregor Manarino says, become your own central bank. So just always appreciate you joining us here on Liberty and Finance. Look forward to having you back in your home base the next time we talk.
Yeah, I look forward to it too, Dunnigan. Thank you. And I'll just leave you with one last thought. And just trying to reflect, I would simply say this, that we are moving rapidly towards people's desire to protect. And it hasn't been that way for as long as I can remember. Over the past decade or two, it was more centered around greed, people finding it easy to make money in cryptocurrencies and inequities that continue to defy gravity. And that's thanks to the Federal Reserve and their policies of easy money and low interest rates. But when that switch flips from greed to fear, this is why they say there's no bull market like the metals bull market. And when you listen to what Rick Rule tells us, as we've said many times before, with 0.5% allocated to metals in this country, when that switches from greed to fear, I don't think truer words will have ever been spoke. So anyways, thanks for having me down again. It's always really a pleasure. And I'll see you in person, face-to-face Tuesday. And of course, later on this summer at the Boca Resort for the Rule Symposium. So looking forward to seeing you.
That's right. I forgot to mention that. Yeah, we are. We're going to be together in person at the Miles Franklin booth at the Rule Symposium on Natural Resource Investing in Boca Raton, Florida, July 26th through 29th. So, folks, you'll also see a link in the description of this video so you can register for that, and you'll be helping our channel at the same time. Good reminder. Thanks, Andy, and look forward to seeing you online next week and in person next month in Boca Raton.
All the best. Take care, Dunnigan. Thanks, my friend.
Take care.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.